So we got a close just a little bit positive on the day after the overnight drop. Looks like we found some fairly decent support around the 5780, 5778 level, which is the bottom, roughly the bottom of that election gap. We could continue to push up tomorrow if we see like softer PPI data. So I think PPI headline like 02, and then core 03 or less would probably at least be considered flat, and then I could see us pushing up more, maybe like 5920, which I know sounds like a big move, but that seems possible. Maybe even higher, maybe even back to like DNGN before the CPI print. That would be ideal for bulls to get back there before the CPI print, if possible. So I think those would be my upside targets. I don't know how much we're going to move up overnight. Usually the overnight session's not super bullish going into going into major prints like that. People tend to take a lot of neutral positioning, but I will say that a move up to like 5900 doesn't seem out of the question. I could see that being like where things get pinned. So we may get a little bit of a continuation in the overnight session, but I think it'll eventually like lock up. It could stay around this 5875 level too. Either one of those like minor support resistances could be pretty important. Yields, I mean, mostly continued up at the top end. The 10-year almost above 4.8. 20 years still moving up, so is the 30. The 5 years now above 4.6. Dollar stayed higher, but didn't regain the highs for the day above 110. If we see hotter PPI tomorrow, we'll definitely see dollar and yields move up pretty substantially. Commodities continues to drive up, both nat gas and crude pushing higher. Crude now at 78.68. So if we didn't have inflation increasing before, we definitely will now. Gold, however, and silver down, so precious metals losing a little bit of ground. It does look like industrials and metals largely did pretty well. Agricultural not too bad. Correlation broke down a little bit today, but still on, or pushed down a little bit today, but still on trend. This is probably a lot of weekly buying that's driving correlation down as people buy into the OPEX this Friday. Don't forget that we have SLD starting on Wednesday as well. That in a negative gamma environment, that can have some pretty nasty effects. Presumably, everything would already be sold off given the price action over the last few days, and those deposits would be made early, but not always. So I'd watch out for that. And any aggregate selling in a negative gamma environment is going to be really bad. Carry leverage at 9.42x on the 10-year, and we're starting to see the 6-month move up pretty quickly. So we're getting a little bit of leverage pushed into the short end of the carry trade as well, which is kind of interesting. A lot of that coincides with the drop in the forward yield of volatility. You can see that kind of going on there. But the forward yield on vol is still closing positive again today, which means that the overnight demand for vol might spike again. Remember, people who are long bond funds are encouraged to go long vol here, and so yeah, there may still be quite a lot of demand for that yield on volatility. I will say that like 3.55 is barely over the S&P 10-year like earnings yield, so it's not that attractive at this level, but it's still somewhat attractive, and we'll probably continue to see some spikes in like VX overnight until that goes back towards negative. That's not updated yet, but very gradual increase in move over the last few days. Correlations coming up with that, so those are a little more correlated than normal. Skew is down today, but probably reversed with some of the bullish positioning coming in under 5800 at like 5770, 5750. The short puts there will probably push this back towards the upside, but that'll update a little bit later. 20% of the S&P below its 20-day moving average. That probably ticked up today, actually, because it does look like breadth did fairly well. RSP was up almost 80 points today. So I think we'll see breadth actually pick up here a little bit. That doesn't mean tech's gonna stop selling off really strongly. NQ still down on the day despite everything else being up. And we are starting to get more positive correlation and more rapidly. We've got VX correlation moving up from 47 to 54% today. As that continues to increase and increase at a more rapid rate, the chances for a spike in volatility are going to get greater. Fed fund futures now only pricing in 0.1 of less than half a cut by June. There's a really good chance with the CPI and PPI data over the next 2 days that this goes kind of to zero. And we start seeing rate cuts for the rest of 2025 priced out completely. If that happens, that's going to be quite bearish. We've already basically priced out all cuts until the middle of the year, and so what's really left is cuts into the end of the year. That would bring the rate, Fed funds rate down to like 4.375 by end of 2025. And I think if inflation's hot enough, they'll probably start to price those out completely. If those get priced out completely here in Q1 and inflation continues to rise into Q2, we may even get a reversal in expectations where we start to see Fed fund futures price in hikes. And if the Fed has to hike, they're going to have to hike back up to where they were and then possibly higher. So that means that, if hikes come into play, the Fed would have to probably move up 100 basis points or like 125, either back to that more restrictive rate. And it really depends on how hot CPI is, right? Because if you look at real rates, we're currently well under, a 2% real rate where the Fed funds rate is, Fed funds minus CPI. And so, yeah, they would have to get it out of, that kind of sub 2% range, and doing that would require that they move rates up really, really rapidly. The 10 2-year spread widening a little bit more today. 39 point plus 39.4%. This is still just kind of inching upwards. Definitely we'll see more acceleration in the bear steepener if the inflation comes in hotter. So be prepared for that. I think the CPI and PPI prints this week are going to be extraordinarily important. And then lastly, we take a look at the technicals, although I think this is a bit more valid on ES because we actually got the test of the trend instead of breaking through. On SPX, we failed the trend slightly and moved back up, so maybe that we're going to retest kind of this green trend here, somewhere around like 58.60 to, I don't know, like 58.70 by the middle of the week, and the retest there may lead to another failure, or a break back above that could be considered a bull signal. Anyway, that's it. Thank you all so much for tuning in. I hope you have a great rest of your day, and I'll see you tomorrow. Later.